welcome back. I'm honored to have Gillian here, a friend for many, many years. And we're going to talk through the roller coaster life from investing to entrepreneur to investing and share all your wisdom with everybody. Unfortunately, Gillian's fighting a cold, but showed up.
Of course, I wouldn't miss in a world. Can you imagine? He'd kill me.
I would kill you.
I mean, like how many years of friendship? He'd be like, you didn't show.
We actually had somebody, a friend that was on a panel, an investor, and we're calling everybody up.
Panels are better.
Panel's different, but
Solo
still.
show ain't so good.
Yeah, no, that's true. But in the middle of the panel, and then people in the audience were texting her, so where are you?
Oh.
And she had miscalendared the day. Anyhow, we won't say who it is.
Well, this is a visual summit, so, the voice doesn't matter as much.
Exactly. We should have brought her in from wherever she was visually.
Yeah, the funny anecdote on this is that when I've been a public company CFO for the last 5 years, and the secret of public companies is you actually tape the earnings calls. So you tape your prepared remarks, and then you go live for the Q&A. That way you don't have to be really nervous about, stumbling over a word. And in our case, the editors could, get all my ums and ahs out of there. So we tape, and I get one of these spring colds like this one. If it would ever be sunny, I probably wouldn't be sick like this. And by the time I've taped the thing on like a Thursday, and the calls on call it a Monday night. Mm-hmm. So by Monday night, I can't talk. So the tape is this clear version of me talking away, and then when I go to Q&A, it sounds like a frog answering questions.
And they thought you were nervous.
Yeah, I sounded so good on the earnings call.
So what we met, just as perspective, let's talk about a little bit of the background. In 2012,
is that right?
At mentoring at Seed Camp in New York. A long time ago. It's now 7, 8 years ago.
Wow.
Yep.
I would have thought it would have been before that even.
I think it was around 2012.
Yeah, cool.
And you were at Allen & Company.
I was.
So tell us a little bit about life at Allen & Company. And for those in the audience that might not know, one sentence or so. And you had a unique role of investing off the balance sheet across multiple stages. Yeah. Mm-hmm. So tell the audience a little bit about that.
So Allen & Company is this kind of factor in the tech business that people may or may not know of. They don't even have a website. It's a small investment bank that's really focused on relationships, and they're in and around a whole load of companies that everybody would know. If you follow sort of company news, they have an annual conference in Sun Valley that a lot of people write about, where all these amazing people come and talk. And so that's something people know about them, but largely they're a boutique investment bank. They also are really a family partnership, and so they have a long history of investing alongside the entrepreneurs that they care about. And so when I was there, I spent the second half, I was there for about 6 years, and I spent the second half of the time really focused on principal investing and also on mentoring and for better, hanging out with early stage companies. And so it's kind of funny, I took a 5-year hiatus to be a public company CFO, but the companies I was hanging out with in those days were Pinterest and Twitter and Okta and all these things that have done so well. So they have some really great connections, and my role there was to sort of mentor entrepreneurs, create relationships with them. And it's been fun to see, because as I go back to visit Allen, all these companies that I knew when it was,
early stages.
A couple folks in a building with a leaky roof and maybe some granola bars. I think they was happy if I brought free lattes, or Evan.
I think many of the audience are at that stage now, so that's what we like.
That used to be the thing. I'd give free, I'd let people come to my office and have a free latte. And
well, it was more than an office. It's a mahogany special.
Yeah, it's pretty old school.
It's old school. It's classic. You walk in, and it's and it's also Allen & Company is one of the major investment bankers for the media and tech industry. They have the annual event that is everybody flies into Aspen, right?
Sun Valley.
Sun Valley. Sorry.
It's a very old school place. It's fun though. They're kind of traditional, but they have these wonderful conference rooms, and you come in and they have, coffee available and other things, and really nice people that bring it to you. So I always had sort of the more casual crew coming to see me.
So what were some of the investments that you did there, or, you were doing across the, the whole stage? So tell us a little bit of that, because it'll tie into kind of what you're doing now in a little bit.
Yeah, I mean, I made about 28 investments, I think, when I was there. And it was really early stage. I was oftentimes seed money. I wrote many of them off, most of them. But I had some real nice wins in there. Palantir was an early investment of mine, and I'm still in that, obviously. Okta on the enterprise side. Let's see what else is in that mix. Workday. I did really well on the enterprise side. I did a lot of consumer. I'm not sure
what
I did
happened on the
as well
consumer
there.
side?
Consumer TaskRabbit.
Was there a learning there that you're going to evolve to now and not do?
On the consumer side, love the product by the stock was always the way I thought about it. This is like a Mary Meeker adage. She was, I worked for her way, way back when. And that doesn't always work, right? You got to also see the momentum. You got to get beyond that first, it's a really fun product and I like using it myself. So I think my mistake always on consumer was I loved a product, but I didn't wait long enough.
Momentum.
It is momentum, and there's a sort of a famous New York City startup. People may or may not remember OMG Pop. Do you remember that story?
Sure.
So OMG Pop was my one consumer one that I can think of that really, really returned a lot of money. But 2 weeks before it returned a lot of money, we all thought it was going out of business. We were getting ready to write it off for taxes. So, you just don't know. But it's sort of getting over that initial hump and then having, and this sort of feeds into USV, which is the network effect idea, that it's just going to continue to build upon itself. So, in consumer, I haven't made as much of a return for myself and my family in that space. But I'm still a believer. I'm always a sucker for a great product.
All right. We talked yesterday with Nabil from Spark, and he was like, product.
Yeah.
And so what's the craziest story in those days, investor story, like that you can remember? It's always great to give entrepreneurs insights. I mean, it's easier from an outside to say, hey, that did a great exit, and that was a horrible loss, or just a loss. But then the behind the scenes, as you say, it was going to go out of business one day, and then it was a huge exit.
I think one of the more fun ones, and it's actually the reason I'm at USV in part, was I was an early investor in TweetDeck. I don't know if anyone remembers TweetDeck.
Sure. It was out of BetaWorks.
It was out of BetaWorks, and it was like a visualization tool for Twitter,
and easily tracking everything.
It was pretty cool. It was really cool. I love that entrepreneur. He's wonderful. And Andy from USV and I were both in this. He was at the time at BetaWorks, and we were trying to sell it to Twitter. And it was a tumultuous sale. I mean,
How so?
The Twitter team, who I adore, Dick and his team. It was Dick and his team at the time. Now, but at the time, they didn't know what to make of a middleman being in the mix. And so I remember they basically said, we don't want the middleman involved. You guys are a middleman, get out. This was the Allen Company Group. Meanwhile, we're big investors in the company, et cetera. So we end up doing these kind of phone calls where I'm scribbling notes to Andy and John to negotiate this deal. And we finally get the deal done. And because it was such a project, we actually took our fee in stock. So Twitter is actually now one of my larger holdings because of that. So I had my TweetDeck stock.
And that worked out well.
That was kind of a funny...
You never know how that's going to result, or how
you never know how that's going to result.
Get a deal done.
No.
So you were at Allen Company for a while, and then you jumped to be CFO of XO Group. Why?
So I'm a little bit of a zigzagger, and I used to say, it's all been a collection of experiences for me. I'm very much like, what's the next open window? And can I jump through it? And can I teach myself something new? I like to learn in my career. And so at Allen & Company, what was happening was I was meeting with companies, and an hour meeting was becoming a 2-hour meeting often. And the extra hour was about coping with one's board, coping with a president or a head of sales or a CTO, relationship that was difficult, strategizing about an IR deck, all these kinds of things, investor relations deck, sorry. And too often I was wanting to sort of get my coat on and march back to the office with the entrepreneur. And so I really kind of came to believe that being an operator was kind of what I really needed to do next. I also was pretty aware that what operators have forgotten this morning was kind of more than I actually knew. And a really good friend of mine at the time got appointed to be the CFO of Etsy. Christina. And then the day that announcement came out, I was like, oh my God, that's what I wanted to do.
Just like that announcement was the trigger.
And
really?
I literally went to Herb Allen, who's the family member who runs Allen & Company, and Nancy Peretzman, who's a very famous banker there, and said, I want to go to the operating side. I want to do something like Christina just did. So I've zigzagged a lot. I've been on Wall Street, I've worked at companies, I've done investing. I used to say, this is all a collection of experiences. Now I say, kids don't follow me in this one. Because, I mean, people who zigzag the way I've zigzagged typically end up kind of lost. And I think I've just gotten really lucky. I think...
I give you more credit than that.
And I've hustled, right? So I've actually earned the ability to get these zigzags to happen in my career at a really high level. Like, I zigged from being a CFO to being a partner at USV. Even I am kind of amazed by that zig. So I sort of now I no longer say to young folks I meet, like, do what I did. I do say when you're young to do it, though. So when you're out of college...
But you're still young, so what are you saying?
I'm not that young. That's why I get sick all the time. When you're out of college, you should zigzag, is my view.
Okay.
If you don't like your job, go get a different one that you like more. If you meet people who you're like, wow, I love what they do, I want to put on my jacket and go home with them, do it.
Right.
Like, when you should absolutely do it.
So how do you decide when that right time is? I mean, you had that, was it building up for a while? Because a lot of people in the audience are building companies or want to build companies.
Yeah.
There's so many researchers that have, brilliant research. Should we commercialize it? Should we not? That we all in life have this question of,
what's next?
What's next? Or is it now? Or should I do it now or later? I mean, how do you personally decide those different big steps?
For me, for the most part, there's been a change. So, when I was first on Wall Street, I was a sell-side analyst. 9/11 happened, and kind of the world went to hell. And so it was a really good time to step aside and do something different.
A lot of people changed careers.
A lot of people changed careers, and so I think that one was there. Both companies I've been at have sold. So when you sell a company, it really does give you the opportunity. When you sell a company, it is such a great opportunity to say, what's next? Okay. So I've done that twice. The only time I've sort of had sort of the midlife crisis, if you will, is that Etsy story I just told you all, where I saw what my friend did and I was like, oh my gosh, she just did exactly what I want to do. So that's the one time I've sort of just like changed it.
And when you got into...
CFO-dom, yeah.
When you got into the CFO world at Exo.
Yeah.
And what was the biggest challenges that you were dealing with at that time?
So
it's a public company. Give the audience a little bit of 2 cents of Exo.
Sure. So Exo Group is the knot. So the knot is the place that 3/4 of all couples in the U.S. use to plan their weddings. When I got there, it had already been a public company for like 18 years. Okay. It was about 20 years old at the time.
Isn't it a holding company as well with other in addition to that, there's other businesses?
There's a baby brand called The Bump, and then there's a kind of moving in together brand called The Nest. This board, I give them so much credit. They were willing to take 2 complete newbies and put us into the CEO and CFO roles. My CEO is a guy named Mike Stibe, who I adore and who is brilliant. And he came in July, having never been a CEO, and I came in November, having never been a CFO. Corporate governance says you don't do that so often, but they believed in us. They saw something in us, and we're both very much self-taught. And it was the most interesting. I've had a really interesting career, and the 5 years at the Knot were some of the most interesting of my career. It is very hard work to be a public company CFO. You get in there, so I started in November. I had to report Q4 and put out a 10K, which is a really serious document to sign your name on with the SEC by February. I had to unravel a lot.
You had to figure everything out, unravel everything, and make sure that you were comfortable.
Yeah, the only thing I knew how to do was the earnings call, because I had been a sell-side analyst. So I had to sort of get in there. I'm very self-taught. I can kind of, someone recently described me as someone you can sort of drop in the pool and I'll figure out how to swim to the top somehow.
That's great.
And so...
True entrepreneur.
Yeah, I mean, maybe not an entrepreneur, but... maybe, I don't know.
It's a DNA that we look for in entrepreneurs.
Yeah.
I'm entrepreneurial rather than
I'm pretty good at figuring things out. It's very rare that I can't. And so I kind of just took it as a learning experience, and I knew that I was really lucky to be there. The board had said to me, you're a strategic CFO, which is code for help us with M&A, figure out if we should sell the company, help us with our investor relations. But it turns out that's like the top of the iceberg. Underneath is controls and taxes and rent and humans.
Doesn't sound like you liked that part of it.
I loved it all.
Really?
Loved it all.
What was the biggest...
There's not a day I regret of being there. It was so fun.
What was one of the biggest learnings, whether or not it was from a mistake or there? I mean, that's a very big different role. And when you're learning, teaching yourself on the go, there was probably a couple hiccups that were big learnings.
Yeah, so the biggest learning, I think, for me was not everybody is me. So, and that when you have a company at scale, that's what you really learn. Everybody is a little motivated, is more motivated by their own experience. And so I had to kind of get used to the fact that I work at a pretty fast pace. If you and I get on the phone, it's like we can get a conversation done in 10 minutes that might take other people half an hour. But for the people that need the half hour, they actually need the half hour. You can't force someone who needs half an hour to have a conversation in 10 minutes. And I had to learn that pacing.
How did you realize that?
Oh, because, people would be lost, right? I would sit in a meeting and I would, let's do this. Yeah, everybody got it? Yeah, sure. Okay, off. A week would go by and whatever I thought we were doing wasn't getting done, right?
I did it even more extreme once. I remember when I was an entrepreneur running Digital Railroad, we had about 7 people in the room and it was a strategy session and talked for about 2 hours.
Yeah.
In the last 10 minutes, I asked one of the guys, so is that get done? Did you get that done? He said, Evan, you gave that to me in this meeting. I haven't left the meeting yet. I can't get it done yet. So,
and that's sort of the gist of it. Yeah. So I think that pacing, you have to get a lot more patient if you really want the whole organization to understand. People talk a lot about repetition. One of the things I was very proud of as a CFO is that I really tried to simplify the numbers. I just took the tack that numbers are not a mystery. Anyone can understand numbers. And in fact, my largest audience was our editors, who would kind of come to me and say, I get dresses. I know that camo is okay to wear this year for groomsmen. It was like a whole thing, actually.
Really?
What colors go with camo for your groomsmen?
But this got into the CFO's office to figure that out for the knot? What do we...
Yeah. Because there's a thing called Wedding Wednesday where the editors would talk to people who called in.
Okay.
And I was always interested in this, and the editors were always not so interested in me being interested in this. So one of the questions was camo and what could the bridesmaids wear. So I got myself involved in that for like 5 minutes. And my point being, it was really fun. They were so nice to me.
They probably hated you doing that.
No, they thought it was great that someone in the business, side of the house cared about what they were doing. Like, that matters. But I always wanted to make sure they understood the financials. So every quarter, within 24 hours of our earnings going out, I would do a pitch to the whole company, anyone who wanted to listen. And I would try to explain why EBITDA mattered and what the rates of growth were and how we were spending and where the money was going.
They probably loved that, everybody, because they didn't get that.
Yeah. And I came to learn is that people don't do that at companies very often. So people talk about repetition, but it's actually the pacing was the biggest learning, in my view.
And so the sale, you were brought in as a strategic CFO, and so that was part of the kind of look at opportunities. What's the advice to the folks in the audience that are at every stage, small to large, in M&A? I mean, there's a lot of do's and don'ts.
Yeah, absolutely.
What would be in reflection, your biggest advice to the audience when dealing with that kind of situation?
Sure. So I'm sure many of you have companies where you think, gosh, this is going to be a great target for XYZ company. And most people think, in 2 to 3 years, it'll be a target. 2 to 3, in my experience, is always 5. So the first thing is you have to kind of be patient. The other thing on M&A that I think is really important is you cannot push a string. So in our case, and all of this is public, it's been filed, we were actually in the process of selling for almost 2 years. It turned out, we had first tried to buy WeddingWire, which is one of our big competitors, and we spent about a year trying to buy them, and then it didn't work. And a week later, they turned around and tried to buy us. And I came into the company at around $9-10 a share, And a week later, after we tried to buy them and it failed, they came back to us and they offered us, I think, like $23.50 or something like that. It's a good number. Stock had been trading in the teens. And we looked at our business, and this is where I was a strategic CFO, because I really looked at the numbers and I was like, it's just too little for the business. And so we waited. And it took probably another 8 or 9 months, and we ended up getting $35 a share.
Great.
So sometimes
it must have been stressful.
It was a little stressful to make that call.
To say, hey, no, not now.
Hey guys,
That's a big question.
let's put our pens down.
Right.
And so we did. And we ended up getting a really excellent price for our investors, a price at which it was okay for all of us to hand the company over and not be the management team and feel good about that.
And not have regrets. 6
of 9 of us left, and that was really, really hard to do. And we had to sort of find a price where that felt like that was okay.
Isn't that also a challenge also with acquisitions? Frequently the acquirer wants the team that's doing it. I mean, that's frequently, depending on the stage and depending on the acquisition, a majority of them say, well, we're buying this great company, but also this great people, really.
Yeah, and then culture comes to play, because so often that doesn't work.
But they kind of knew, this acquirer knew that a bunch of you were...
Yeah, our deal, we were bought by a private equity firm called Primera, who had kind of months before bought this company, WeddingWire, and they wanted to merge them. So a big piece of this story was synergies, for better or for worse. Right. So I became, and my CEO and the rest of our management team became a synergy. We were a little expensive to keep. You can't have 2 CFOs.
Well, that's probably good in the PE world. They're always
looking for that kind of thing.
Filtering.
And so now the company is called the Not Worldwide, and I think they're going to do great.
Cool.
And I'm so happy. Like, it was such an easy choice. If we had sold it for $23.50, I think I would have been really like, At $35, I felt like we made people return. Half of our employees had stock, so they did well. And I felt like we did a really nice job of finding them runway, and we were very purposeful in negotiating generous severance for those who had to leave, and everybody's landed. I mean, the bigger problem is the parts of the team where, for those who have left, the ones who are there are off and running, and they're doing such cool work. And the ones who are leaving or have left, it's much more about taking their time to find the right thing. They've got tons of interest.
I don't think I told you, but I kind of knew something big was happening.
Oh, yeah?
Because in the past, as we've, our friendship has gotten, improved over the years, and we met a long time ago, if I'd ask something or a favor or a question, the response rate was pretty quick.
Did I go MIA on you?
No, but don't. It's not a negative. I'm not bringing it up as a negative thing, but you can kind of read between the lines. I sent a couple of emails. It's like, hey, well, is she okay? I'm worried about Gillian. There must be something big going on. And there was an announcement. And it's like, I get it now. That's great.
Yeah.
It's not a negative thing. But it's just a reality.
That's funny. Public company CFO-dom is literally all-encompassing.
Yeah.
It's really wild. Like, I really came off the grid of startup land. Because I used to do Techstars mentoring every year. I think you and I did that sometime. I didn't have time to do that. You are just going.
No, I noticed. Well, it's good to have you back, though.
So
That's
now
all I want to say. It's good to have you back out of that. And so let's talk about, this is great that a couple weeks ago, or 5 weeks ago, you joined Union Square Ventures.
Yeah.
And what I love is that, as many in the audience probably know or don't, in the past we've had Albert here, we've had Andy here, Rebecca, and yourself, and we're honored that,
It's a rite of passage, apparently. Let me just tell you, this is really funny. So at Union Square Ventures, the first rite of passage is you have to write your own blog post announcing your arrival, which is very stressful, right? Because they're all such good writers. I'm not a blogger, and they are such good writers. So, you don't even want to you nervously send them your first draft. Mine got through. Like, actually, what's on the blog is actually what I wrote. There was very few edits, which was...
Who edits?
The whole crew.
Everybody together?
Yeah, Union Square Ventures is just one big, long conversation, and they're all on it, whether it's on email or we're together. It's really cool. But then you asked me to come speak here, and I sent a thing saying, should I do this, or what do you guys think? And everybody said, all of us have done it when we first started. It's a rite of passage. You do a blog, and then you do this conference.
That's great. Well, we're honored to have you.
So I'm delighted to be here.
So let's talk a little about what's also great. I mean, we're co-investors in Clarify. We were co-investors in Media Chain, which was sold to Spotify. We both have theses, obviously, on different levels. But tell us about the latest, the evolution of the Union Square thesis, and what part of that, excites you the most?
Yeah. So Union Square is, really built around the concept of networks. And when we think about investing, it is around this thesis of networks and platforms and protocols, creating more access for folks to services or goods or money or whatever. So in every business and in every conversation we have about a business, and I've been there a month, so I've got a teeny tiny bit of experience here. The question is always, what are the network effects? Are they working? Do we have evidence they're happening? But at the end of the day, the way I've been thinking about it is a lot about access, right? Whether it's in crypto, can you get folks access to value in a new and different way via protocols? In healthcare, can we lower the cost of healthcare, which is really, outrageous these days, via some network that's going to work for us? Or, in any of the other consumer enterprise spaces, can we find a way that the actual business itself creates a network effect and kind of makes a snowball that rolls with you? So that's kind of what it is. Everybody's a generalist, and they are what is advertised. Meaning, Union Square Ventures just has a wonderful reputation. And when they came to me a while ago, actually, while I was selling XO, and asked if I'd be interested in this. And this is one of those times where you say, a seat's opening up there, and you want me to take that seat? I am in. Right? And what in many jobs, I'm sure you guys have all experienced this, you start a job and kind of 2 weeks in, you find out all these things that were sort of like you talked about in the interview process, but they become bigger things when you get inside. That's not the case at Union Square Ventures. Everything that Union Square Ventures says about itself is what Union Square Ventures is. And the way I like to talk about it is it's just a big, long conversation along a theme. Every company we look at, everything we think about doing is around this conversation around network effects.
And so what aspects of it? I mean, I think I was reading between the lines, but tell us, it was part of it also your role going to be on the finance side there as well, and doing investment. And so, what's that percentage over time? It probably changes, but how much of your time is going to be spent investing in what stage of companies? Because there's also a growth fund and the traditional fund. So, when they came to me, they proposed the idea of me taking on what's called, essentially what we call internally the operating role. So a partner there named John Buttrick has been operating the firm for the last, maybe 10 years or so. He's also built one of the most amazing portfolios, you've ever seen. CTFO is in there, Carta's in there, whole bunch of stuff. It's awesome. So I had joked that I just want to have John's career at Union Square Ventures. If I could run the firm and have that kind of portfolio, I'd be delighted. But here in the no pressure, John.
No pressure.
You got some,
I know.
Now you got to deliver that.
The more I look at his portfolio, the more I'm like, oh my gosh, what have I done? Meaning like that's a big hump to get over. He's really amazing.
You'll get there, right? Isn't that what you were telling us earlier, that you'll figure out a way?
I'll figure it out. I'll figure it out. But so basically what I've been doing near term is focusing on the operations of the firm, understanding the funds, the performance, how we look at it, capital calls. And I've been having a lot of fun this week on tax treatment of crypto assets that are earning income. I love that you think of that as fun. Oh my God, it's so fun.
Oh, God.
Yeah, you got to maneuver, and you got to think about how to, not pay too much tax, and you got to
it's kind of the
structure and
I think that's
lawyers
great.
And accountants. It's like, I think it's so fun. It's just a big puzzle.
Everybody's different. Even Abby on our team, she and I, and there's things that she loves. I'm like, oh God, thank God, do that.
I love figuring out stuff.
I can't do that.
So the crypto stuff is, I keep saying, well, guys, I'm really new, so I apologize if I don't understand. And every expert I meet in crypto is like, yeah, we're all figuring it out as we go. So, that's kind of fun. So I'm not joining too late on that. So I've been doing a lot of that. And then in terms of companies, I've only looked at a handful of companies in the little time I've been there. Right now, I'm largely responding to folks that have met me or know me who send me things to look at. But I think that give it a year.
For the traditional, not for the growth, for the traditional, the main fund.
For traditional venture.
Yeah, okay.
So we're set up, we have venture funds. Roughly every 2 to 3 years, we raise a venture fund. It's typically in about the $200 million range. And then kind of every 4 or 5 years, we raised what we call an opportunity fund. And the opportunity fund is a little bit bigger this time, it's 250. And so our venture funds are typically sort of Series A, Series B, Series C companies. And then as companies get bigger and we want to follow on, but it's not really venture anymore, we put it into the opportunity fund.
Are there separate people managing that, or is everybody managing
No, we're
together?
all, it's one group. One of the great things about USV is we're so small that we can manage everything. It's a unique place because we're not trying to put billion-dollar funds to work. We're putting smaller funds to work. And it gives us the opportunity to pass on things even when they're hot and have no regrets, which is really neat. So we all manage all of it together. And in fact, we review and talk about every company every Monday. And we can do that because they have, and I give myself no credit for this, but because the partners there have just purposefully kept the place small. And that gives you the luxury to sort of do that. You got to get some wins in there for sure to get the returns, but you don't have to chase every hot deal, which is really nice.
So let's talk about visual tech a little bit, and then we're going to offer questions for the
Sure.
audience. Some of the companies, obviously, in the history of Union Square that relate to visual tech is Tumblr, Twitter, Etsy, Figure One, Dronebase, Clarify, and a bunch of others that Rebecca shared last year. And you've known me for years and talking about this.
Yeah.
So what aspects of visual, are there any sectors in visual tech that is intriguing you these days, or how do you look at kind of what was once cute niche in science fiction and is likely not anymore?
Well, I've never really thought of it as a niche. I mean, I think you and I have talked about this in the past.
You haven't, many others have.
In my view, life is what you see and hear and if you're lucky enough to be able to see. So to me, you've got all this awesome technology that's going to take what you see even further. And so I've never really thought of it as a niche, but I do think, and this is where I think you're very much like us in a really important way, is and I'm a big fan of this, folks who go deep in a sector, who really try to understand it, have a very unique and special place in this business because there's a lot to think about in this category. And I commend you for what you've done in terms of really being expert at it. And so I don't know that I have an opinion yet, like a specific sector.
Are there in general, not even in vision tech in general, big picture?
Yeah, I mean for me, I think I'm pretty curious about AI. Having run a company and seen where the inefficiencies are, I just think that we can create more and more platforms that take some of the work that folks are not that interested in doing out of the puzzle every day. So I'm kind of interested in that space. But really, I'm kind of open to anything that's interesting. I'm also, and this is sort of self-serving in a way, but I feel like I've earned the right. I'm really interested in funding female founders.
Great.
I just think I've got myself into a position, I wrote this in my blog, I'm in a position now where I can help more than I ever could before, and it's time. And
I think that's fantastic.
Or it's beyond time, it's past time. So
we agree. As you know, you've been also coming to our LDV dinners, which we do 10 times a year.
Oh my God, he works so hard to make sure the gender thing is 50-50. It's amazing.
And it works.
It works.
There's over 1,000, almost 1,200 people, and it's half and half. And our speakers here, did you see the...
Yeah, you have an unusual conference that way.
We work very hard to, and I think it's very important.
Yeah, to me, it's like, sometimes you get yourself into a place in life where you can help. And so that's kind of where I am these days.
So questions. I've got more questions, but open it up to the audience for questions for Gillian. And one of the things it was surprising yesterday or enlightening yesterday was that the 16-year-old high school students asked better questions than those that are that are older than 16 in the audience.
It's because everybody else is checking their email.
Yeah, and I also kind of feel like another statement that I usually make is that if we don't know you, the best way for you to be brilliant is to ask a fantastic question. Otherwise, we'll never know who you are.
Is this a drawing?
That's amazing. Yeah, that's us.
Oh, I just kind of looked at it. I was like, oh, wow, I like that drawing.
Nobody has questions. I'll keep asking questions. You got to have some question. There you go. Thank you.
Have a solution to these colds?
Yeah.
Or like the weather? Could we get some sunshine? Yeah, hi.
Can you speak up?
The question was, I can repeat it. The question was when you say, in sort of describing that Union Square is essentially what they market themselves as, one of the examples I gave is that we review all companies every week. I think the total portfolio is, I want to say it's like 60 to 70 companies. And we literally sit and we look at each name. Now, sometimes there's not too much news, but there's actually largely news on every company almost every week. And we really sit, and if we get onto a company and there's something we really need to discuss as a group, we do. So what's really great about us, I think, is that, and of course this is the only real venture firm I've been to, so granted I'm biased at this point by a long shot, you get the brains of the entire partnership. So, it's not like if you had me as your lead investor, you don't get Fred Wilson, you actually get Fred Wilson, or Andy, or Rebecca, or any of them.
It's a team effect.
It's a total team effort.
Yep.
We really do discuss these things, and everyone has a voice, all the way to, some of you may have met our fabulous network team, or some of our analysts. I don't know if Naomi's here, but we have just incredible people. You get everyone's view on your business, and then we try to parse that news and information and our thinking back to entrepreneurs via our coaching and mentoring.
Was there another question over here? In the middle there?
Hi.
Or not in the middle, over there. Oh, the mic's coming.
Hi, my name is Mairead. It's like parade with an M. I'm a computer vision specialist for Harnum. Your career path has been really interesting to hear about so far. I was just wondering, have you always been kind of in computer vision and AI, or how did you take an interest in that field?
Oh, for the firm or for me?
For you personally.
Oh, yeah, I just think it's an interesting space because I've been involved in tech since the 90s, so prior to the Netscape browser. So, see, that's how old I am.
I was there too.
So I've watched the internet go from, I had to learn how to use Unix news groups, like when I first started on Wall Street, to go find out what people were really saying about how many computers were being sold every quarter. And then all that came to life visually. And so I think I've always been really intrigued by Moore's Law and how it's enabled us to have just more and more of the world at our fingertips. And so I think I come at it from sort of a lover of what the technology industry has done for the world and what it can, the possibilities get opened when you connect the world and you have more computing power at your hands, more so than like a direct visual tech focus.
And can I just ask one more
Sure.
question? Just to follow that up, really helpful, thank you. How have you been able to kind of surround yourself with thought leaders throughout your career path from early on?
Yeah, that's a really good question. How have you been able to surround yourself with thought leaders? I feel really lucky in this regard. And I think for the most part, it comes from really focusing on people when you're talking to them. I know that seems really strange, but you can go to these mixers and meet 1,000 people really at the surface. I'm not super capable of doing that. I was giving you advice. I remember meeting him, and he was doing all these events, and I remember going to see him, and I was like, I don't know why you're doing these events. I'm not sure this is working for your business.
I remember that.
Here's why, and I really think you need to be more selfish for your business, and all this. And you did the right thing. You did listen to me. But I think that I actually sat down, looked you in the eye, and said, "This is my view," and let me hear your views. And we debated it a lot.
Yeah, I remember.
And I was wrong, by the way. Don't tell my husband. He doesn't know that I've ever wronged anything. At any rate, but I think it is that I've really tried to understand who people are and where they come from, and I've tried to get a little deeper than hello. And you can't do it at mass, but I've been quite lucky in that. The other thing that I think is really important is I've always tried to create relationships with people I really admire who are kind of ahead of me in the game. So back in the 90s, it was actually a lot of CFOs who that's kind of why I became one, who I thought were really amazing, and CEOs. And at the time, these folks had smaller companies than they do now. And I just tried to understand what gets you up in the morning? Why do you do what you do? And could I imagine myself like that? And I think that because I was curious, it helped those relationships form. I've been really, really lucky. And you got to slow down and help your friends. and you got to just pick people and go deeper with them, or else it's really hard to get that kind of thing back.
I agree, and just on that note, I mean, I remember specifically that discussion, and I took it to heart.
Such a know-it-all at the time. Oh my God!
I took it to heart, and I look at it as two pieces of the puzzle. There is a wider opportunity of connecting with many people, and then going deep with a selection of them. And in addition to Gillian's great advice, another mentor of mine in Europe said, you know a lot of people, Evan, you're a good networker, you like talking, you like helping people. You can't help everybody, and you can't know everybody really well. But try to help as many as you can, and then also have a subset that you go deep on.
Yeah.
And one of the things, and that was relating to investors, and we have certain funds and teams, like Union Square and LDV and a couple others, that we interact with more often to that point.
Yeah.
So choose a subset, as Gillian suggested. One more question really quickly. Go ahead, Alan. Or maybe two more, but we're going to get delayed again for lunch. So if you want more questions now, raise your hand if you want more questions now and a smaller lunch break. Okay, not many. Okay, so I have a couple, one or two. Go.
Gillian, you mentioned you've obviously got amazing high caliber deal flow, and you have to be comfortable with passing on really great opportunities. Any insights on decision process and decision dynamics?
So, people say that, right? They say we don't have to do everything. I've only been at Union Square for about 5 weeks on the ground.
I think I emailed her the next day. You're coming to speak.
Actually, yeah, he did. It's really funny. I had actually been there for a little bit, and actually the funny trick was I'd been in the office for about 2 weeks before that blog came out, and then entrepreneurs would come in to visit who knew me, and they'd be like, and so my answer to it would be like, try emailing Gillian at usv.com, see what happens. And that was how, so some people kind of got word.
There's somebody on the, I think, network team by the name of Gillian?
Yes, I have heard.
And I started, it was messing up my contacts list.
Yeah,
which is,
it's messed up. It took a while for the partners to figure this out. Okay, so deal flow. We recently had a deal come in. It's a really hot deal. Like lots of people are in it. Awesome company. But we couldn't get comfortable with the valuation. And so an hour after the company came in, I watched a partner call and say, thank you, but no thank you. I think for us, we see a lot because of the network, because of the people. People show us a lot. But it is a conversation. Does this fit not only our strategy, but our return profile? And because we have a small fund, we really do think about, are things going to be 5 times what they are today? And can we imagine what has to happen to make that happen? So the conversation is largely around, do we see enough room in the combination between the opportunity and the valuation to get the results we need for our customers? We're really, really lucky. And I think it's a testament to how good these partners have been that when our firm raises money, it's more of a waiting list issue than it is a pitch issue. Most investors who invested with us come back every year and they go up in size if there's any room. So it really is about being true to what it is you care about, having the conversation, make sure everybody's view gets through, and then just being willing to walk away if it's not exactly a fit for us. We're lucky we get to do that because we're small.
One last quick, very quickly, Kristen, right here, in the front, right over here. We like to mix it up. Professors.
He just wants to make it difficult.
VCs. No, I want to hear her professor's question.
I'm Kristen Dana, a professor in computer vision and a co-founder in Steg AI. My question is, you talked about inefficiencies in companies. Now, in your position, you have a bird's eye view of seeing many companies. What are the big inefficiencies that AI can help with?
So I think that the back office is. I'd like to see people be in more of a position to think than do, and the back office at most large companies is still really slow. So whether it's solutions to make legal forms come through an office more efficiently and be stored more efficiently, to in the finance area, there's just you should be able to have essentially a lights out back office, and the finance professionals you have should be able to do the really strategic thinking about where are resources going, how are we managing them. And so I think that those are 2 areas, at least in my experience, I think that there still is a huge role for in-person meetings, although I do think that video, I mean, we used a lot of video because we had offices all over the world, and it really helped. We had international developers in China, and I think there was room in that communication gap to sort of make that more efficient as well. So I'm a believer that there's just a lot. There's so much that's still pen, paper, copiers. I mean, the amount of paper we went through at Exo Group was astounding. And at USV, I have this little itty bitty printer. You know, at Exo Group, I mean, I was burning through so much paper every day just to like operate the business. That shouldn't happen. That should all be on my iPad. And so I think there's just some very fundamental getting from A to Z things that could go digital that I think would be very helpful.
So to bring it to close, 2 more questions. We could talk all day, but
Sure.
we're going to mess all the schedule up. And
I may not have a voice by the end.
well, you're doing great. So I love ending conversation, fireside chats with these kind of 2 questions. One, in a 1-sentence answer.
Oh, God. Okay.
1 sentence, the advice to the people that want to build businesses, whether or not they're a scientist, researcher, or entrepreneur, what's the 1-sentence advice to help them succeed?
The sun comes up every morning. It
Okay,
does.
good. I like it. Now, even shorter answers.
That was not that long,
Hang
right?
on.
You know,
No, that was great. I
didn't.
thought it was great.
I did what he asked.
You did great. And now in 1-word answers.
Oh, God. Okay.
Okay. So your favorite personality trait of entrepreneurs and your least favorite personality trait of entrepreneurs.
Persistence.
Okay, it's positive. Good.
Yeah. Persistence can also be negative, though, interestingly.
Well, you.
God, this one goes both sides, but no, I'll say it a different way. Selfishness.
Yeah. Okay.
Selfishness does not work in business.
I agree. Gillian, thank you very much for
Thanks,
coming.
everybody.
Thank you. Give a
Thank
round
you,
of
Evan.
applause. Thank you.
Thank you so much.
Great.